Welcome to session 12 of the Precision Traders program group community. And tonight we're going to do another review session or another question and answer session. I think these are good. Gives everybody a chance to think of some questions in advance, especially the people that can't attend live, due to geography or time zones or work or whatever. But we also don't always have to wait for a session like this to have questions. We can ask complex questions, sophisticated questions in the group. If they need visuals, I will do a very brief screencast, which is limited to 5 minutes, or a short video if I have to. So I got a question that just came up in here. I'm going to ask that we get through the questions that were posted in advance, and then hopefully we'll have time to get to any questions you guys have in here tonight, either directly or as a result of questions that are being asked. That's why I like questions being asked, because they create other questions. So let me clear some of this out of the way. All right. So let's get to it so we can get in, out, and on our way. Had 7 or 8 questions today. The question really starts at the bottom here, second paragraph. My question is about the process of marking up channels using TAB29. I've watched your video, part 7 of the TAB training, several times about the process you use the 30-10-1 and marking up channels in the indicator first, then going to price. I've tried this several times, do not have too much confidence yet in how to use them. So I marked up today's video, sir. Okay, so I copied one of those charts. So the first thing, you can't see what I'm showing? Oh yeah, I wonder why. Let's try that again. Yep. Yeah, I have a monitor screen so I can see that you're not what you see. All right, so it's about marking up the channels. So there's 2 things to remember, and you've got trend line channels, which can be very precise, should be very precise, wick to line, wick to wick to wick, line, to the pip as much as possible. And you'll know when you have those, right? We're just talking about price channel. And you'll know when you have those. But understand, and so in those situations, we're going to have those points where price comes up, and it's just literally to the pip on these, right? And you've seen those. And so that would be a true trend line channel. Okay. Marking a trend channel on a chart doesn't have to work like that. Alls we want to know, if I have price come up and come down, it's going to give it a very similar look, but I'm going to breach some of these so it wouldn't work as a trend line channel. And then you might see it bend a little. So in general, in terms of the trend or however one wants to look at it, it doesn't have to be wicks, doesn't even have to be everything there. It's not tradable, is what I'm saying. It's just the direction of the trend. It helps you get what's going on. They're two different things. Because inside this one, we have a reality that shows us micro channels. So don't get the two confused. All you want to do, it's not so much to identify a channel as you want to see where TAB29 is calling tops and bottoms. So in the example submitted here, what you want to do is go to the bottoms and just, this is a very good job. Top, bottom, top, top, bottom, top, 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 bottom. Fine. So when you get your plots there, try and draw lines that represent those tops and bottoms. Don't try and force it into a trend line channel. Because quite frankly, if you were on the chart here before this stuff was built, how would you draw a trend line? What would you draw a trend line on? This high wick? So we're just talking about making sure you get a sense of where this stuff is. And so you've got a channel and a bend, essentially. You've got one channel that is here to some extent, and then you've got a channel that's here. Bottom, bottom, here's the bend. Here's our tops. And so like that. That's essentially what you got going on. So it's okay for it to bend. How many times have you seen that in a pitchfork? So it depends on what you're trying to do. You just want to get a sense of going on. So when we talk about coming to the charts, we're really talking about coming to the charts, going to going to your 30-minute chart and seeing what's going on. As I said last week or last time, you won't always see a perfect channel. And that's okay. But you can match and draw lines, even if you want to make them dotted lines, thin lines, whatever. You can find multi-wave tops and bottoms. That's just a hint to give you an idea to see what you see. That 30-minute chart may look more like that. That's fine. As long as you see where it's been and where it's going with the current waves. Remember, multi-wave does one thing. It flattens it out. It's going to flatten that channel out, or those channels out in TAB29. Right? So we want to see what's going on there. Generally, then the 10-minute moves are going to be channels inside these channels. You're going to have a 10-minute channel, and you'll be able to see it over here. And then the current channel, And then we look at the 10-minute chart. Of course, that channel is going to be way stretched out, so it might look like that. And with that, you should see the 1-minute channel. If you can, you may not be able to. It's okay. We're only talking about the times we can. And again, same thing. Inside this channel, the 1-minute wave is going up and down, up and down, up and down. Oh, here it is. Or inside the 10-minute channel, it's going up and down, up and down, up and down. Inside the 10-minute channel, 1-minute waves going up and down, up and down. So over here again, most current time, we've got a 1-minute channel. And prices going up and down in it. The bottom line is, you want to try and you want to try and see where the next harmonic wave convergence will end. Where's the 10-minute harmonic wave convergence going to end here? Probably here. Where's the 30-minute wave convergence going to end? Probably here. As we see price moving up here, and it's approaching the top of this 10-minute channel that we can see inside the 30-minute channel, that's this spot right here. So this spot correlates to that spot, correlates to that spot. So we know as this is moving up, we should see the convergence taking place over here. 30, 10, 1, all in one spot. Longer move on the 30-minute wave. A cycle or two of the 10-minute wave. And now inside that, the 1-minute wave. Top, bottom, top, bottom, top, bottom. Now it's going up to the top. And when they meet, that's when, because this channel got here, and this channel got here, and this channel got here. It's just to help you see what's going on. And it's to avoid coming to the charts and just trying to trade from multi-wave or TAB29 on your 1-minute chart. It's to help you get that bigger picture. Sometimes it's not very clear. See, this is a thing. Why can't you see some channels and I can? I got 15 years of trading. Why can't you see some channels and Tim Packus does? Because he's got 3 or 4 years of trading. It's a volume of trade thing. VOT. Wayne said it. This is, y'all just have to understand, this is reality. So the more trades you take, this is why those of you are sponging back, trying to learn academically. Oh, I've been through the modules 5 times. But you haven't posted 20 trades yet. So all the stuff that comes natural in seeing it, you're not seeing yet. So you don't want to have, there's a difference between a channel you're going to trade and just getting a sense of what price is doing. And we're talking about getting a sense for being able to look at your 30-minute chart and then your 10-minute chart. And then your 10-minute chart and then your 1-minute chart so you can see what's going on. Now you guys that are newer, you don't have 10-minute and 1-minute. You only have 2 charts, and that one over here is 5. So if you're in here ahead of yourself, you have to remember that. Do not jump ahead and try and do a 30, 10, 1 orientation. You just skipped about 200 trades you need to make lower level. Any questions on channels? You choose 15 or 10, it doesn't matter. If you're trading quick fire and Charlie Delta off quick fire, you should have 15. Yeah, I don't even want to call it. I don't like even calling it a channel. It's just the price movement. It's just what is price doing, and how do I correlate it to multi-wave or TAB29? It's more like, where are we in the trend? What's going on right now? We should see it. I mean, if somebody posts a chart, we should see what it is. Yikes. On a 15-minute chart, if you're trading 15-minute, put your power 15, or put your, on a 15-minute chart, put your peak 15 on, not you, well, you don't have to. It comes up automatically. The only place you do it is on a 1-minute chart, is that you're going to change. So on a 1-minute chart, it'll default to 10-minute power 10. Just take it off and put on the power 15. And now the 1-minute chart will match your 15-minute chart. There's references to 10-minute charts and the 10-minute wave, and that's because the people from Pip Club, that's where we were, was 10-minute charts. So when the scans came along, we just adopted to 15 minutes. So don't freak out because some people use 10. Just set your charts up for 15-minute trades as a quick fire Charlie Delta precision trader. Fully dilated, Zoe. All right. Question I have, and I think it's been answered several times in the group, is that even though I have access to TAB29, I only post a couple of forks to the group, I need to forget about TAB29 until I've posted 50, 100 other forks, including Quickfire and Charlie Delta, and then graduate to using TAB29. Am I correct on that? The progression has been Pitchforks, Quickfire, Charlie Delta, X-Ray Alpha, TAB29. You can do them in parallel, or you can do them linearly. The thing with TAB29 is it will make more sense when you have something to apply it against. So it works very well in confirming pitchforks and being able to trade pitchforks. So I don't think you can skip anything, and I think you need to understand pitchforks thoroughly, and I think you need to understand the scans. So the whole Quickfire Charlie Delta training needs to be absorbed, and you need to put it to use. Don't feel like you're being left behind because other people are posting TAB29 trades. You cannot skip that process of a volume of trades for pitchforks, for Quickfire, for Charlie Delta. Everybody cool on that? There's no rush. Doesn't matter. You know, we're going to have people, a lot of you signed up in late October, November. No, whatever, before Christmas, before the holidays. You know, November, maybe our first sessions. We'll have people sign up tomorrow. We'll have people sign up 3 months from now. There's no race. Everybody goes their own pace, but we do have the same progression. That's fine. No, that's good. That's good. Always get confirmation. That's good. That's what a good trader is going to do. Awesome. All right, let's move on. Having fun. In last week's Grizzly session, at the 35-minute mark, you talked about trusting the hook back on the peak one due to the design of 4 judges and 1 indicator. To clarify, this also applies trust in the hook back to the other indicators, power 10, peak 10. Wrong. No, absolutely not. In the same 1 minute chart as an example, you will see that 1 minute wave come down, and you will see the 10-minute wave come down, and there's fake outs. That's the nature of power 10 on a 1 minute chart. You're bringing 10-minute data and showing it on a 1 minute chart. 1 minute wave, we can trust that hook back. 10-minute wave, nope, 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 nope. The only time you can trust a hook on a 10-minute wave is when it's simultaneous with the hook of the 1 minute wave. Oh, 10-minute wave is being all kind of semi-choppy, and you'll see them look like that, right? And that's where the 1 minute wave comes in, comes down, not boom, boom. So at its low point, you can trust it. But the low point would be determined by the 1 minute wave starting to hook back. But in and of itself, no, you cannot trust the hookbacks on those waves. That's why you always got the 1 minute wave to confirm. Now, if you're trying to do something like trade off another time period, let me know that. But as long as we're talking about hookbacks and trusting the peak, we're talking about the 1 minute chart. Will there be sessions covering the shredder indicators we were giving access to, aside from the ones that we already have already been covered? I'm not sure which ones you're talking about. Are you talking about the moving averages or the INS? INS is a support and resistance system. I just need to know more about what you're looking for, because there are rough instructions on those other waves in addition to the TAB29, how to load an indicator in TradingView. And then when the second batch was brought out, there's that second video about everything else. There are some, slight tricks and traps kind of thing, but pretty much self-explanatory. That question needs more for me. Harmonic targets were actually talked about when I talked about the 62. They are the 62 money map harmonic targets. They have nothing to do with harmonic patterns. They have to do with the 144 pip harmonic cycle on a 30-minute chart. And treat them like strong support and resistance. Sometimes they're hot, sometimes they're not. It wasn't specific enough. That's why I say I don't know the nature of the question. I mean, I could take a session and just go through everything, all of the indicators, but they're not, I wouldn't call them indicators. They're, little programs. You can't call a support and resistance an indicator. We just, it's called a indicator, but it's not really an indicator. They're just support and resistance. I don't want to make a big deal about them, but I can spend time in a session doing it. They're designed to be pretty self-explanatory. It's just support and resistance, various support and resistance subsystems. But noted, schedule it. When trading trend lines on higher time frame, i.e. 30 above, is it better to wait for harmonic wave convergence between the waves before we exit a trendline trade? Or should we wait for a hookback of the lower time frame wave? 30-minute wave. Similar to pieces of 10 to exit the trade. Depends on what you're trading. Guys, first of all, and I don't want to make this seeming confusing or dismissive, there's no right thing to anything here. You have lots of opportunities to trade. First of all, the first comment I want to make is when you step up to 30-minute, you should be using 30-minute money management for your trades. And there's a whole page, that's reviewed in tab 29 on money management for 30-minute trades. I think there were, 8 or more different money management schemes you can use depending on the situation and trader's choice. There's no best, but my recommendation is in each situation you use the same money management each time. There's robotic trading. That's good for your head game. It keeps your ego and emotion out of the trades. And guess what? Sometimes your money management is not going to be optimal. Sometimes you will exit and the trade will make more money. Sometimes you're waiting for your exit and you're going to erode some profit, before you have a chance to exit. It's all okay. So essentially, it just depends on what you're trading. If you're in a pitchfork, where in the pitchfork, right? How proven is that pitchfork to go from median to outside, or from outside to median, or from median to lower parallel, or from lower parallel to median? What's the consistency there in front of you that may say, yep, I want to ride this to the other side? If you elect to ride it to the other side, you have options. You can divide that channel up into Fibos, maybe 2, 3 Fibos, 38, 61, 8, and 100. Or you can use the quad in the Fibo itself, in the Fibonels and the pitchfork itself. Just use it as a point where if I get past that point, I'll move my stop loss to, whatever, 10 pips in profit. Depends on the size of the fork. Maybe it goes, it's a 30-minute fork and you've gone 25, 30 pips, use the whole 30, the whole 21 on the 30-minute chart. Maybe you just want to go extreme on the 30-minute wave. It's up to you. They're all good. See, we have a science here, and this is what you guys have to mature into. We have a science, and it's cool. You may be frustrated at times because it doesn't seem like there's definitive answers. What should I do next? You have options. And that's what demo trading for. Remember, it's your laboratory. That's why you don't trade to win. You trade to test. You trade to see what you're doing wrong with the thing you're doing at the moment. And with that volume of trades, you'll figure out which money management you like the best. And it's not based on what happened in your last trade, by the way. It's based on a volume of trades. Well, learn each one. That's the whole thing. Learn each money management. How are you going to know which one you like the best unless you try them? But you can't mix and match. Don't do one thing once. Don't do another thing another time. Go take 10, 20 trades on a 30-minute trend line bounce and see what you like. See what makes the most sense. They all work. Again, old paradigm differences. In old paradigm, you have this, this big long checklist. Here's 87 things to do in order to learn how to be a successful trader. And we don't go that route. We go, and with those 87 things, here's, this week, this week, this week, this week. There's this time and calendar kind of association on how fast you should get through it. It doesn't work that way in the new paradigm. In the new paradigm, you're learning to become a master trader. And, while you may find it overwhelming, or not overwhelming, that's not the right word. It's just different. But see, there are places that give you the step 1, 2, 3, 4 that you can trade. But we're not doing that. We're creating master traders. We're teaching you a science of price movement so you can trade any time frame in any condition under any circumstances and still make pips. And so some of these things you just have to work out. You need a degree of familiarity with all of them. In different situations. But the thing I would do is go back to the TAB29 trading, get to the module on money management, take a screenshot of that screen that's up there that talks about money management for 10-minute, money management for 30-minute, and make sure you understand what each one is and how to trade it. Don't take the route of, I don't see anybody else talking about this, so I guess I could just skip past it. There's no right. See, that's the whole point. Don't worry about which, choosing which one to use. Don't worry about that. Use one, make 10 trades with it in that circumstance, and then try another one and try another one and see which one fits you, your personality, your risk aversion, how your style of trading, your style of trading, and then it works. All right. So from my perspective, this is the next question. More recent candle went lower than previous candle, even though 1-minute chart suggests the buy and price has just breached the pitchfork. Is this any reason to stay out? I don't know. I'd have to get a micrometer here, but I think it's an optical illusion, maybe because of how you see the pitchfork lines. But from my perspective, those are pretty much the same price point. I don't believe the second one's lower as I look at it manually with my eyes. I think it's just looks lower because we see it breaching the line. It's kind of funny. I'm going how to get back to normal. Oh, here we go. See, that's a convergence. That's as clean as you're going to get. 1 minute coming down, going back up. Well, as you look at it here on your 30-minute chart, it's, I don't know what it is. I don't think it's a wave 2. It looks like it here, but on your 30-minute chart, you can tell it's not. So, convergence in my book. Yeah. Okay. Well, why can I not move on? There we go. Question about TAB29, pieces of 10 trading where there is no trend line, fork, etc. to help with entry. I have seen situations where an alert sounds, TAB29 indicators move into convergence, but price moves up or down quite a number of pips before the trend bars flip. Generally, would it be best to find a better trade or take the trade with a higher stop loss to cover those 7 pips from the lower high? What do you guys think? You be the coach. What do y'all answer to that question? So he's got a convergence and price moves 7 pips. No, he didn't get into the trade is the point. He's wondering if he should get in, move on. Yeah, so most of you were hitting it. It depends on risk reward, right? If he's got a 12 pip channel, no, you don't want to enter that trade. What if he's got a pitchfork that's 250 pips wide? So I think we touched on this before. It's always going to come down to risk reward first. We spent quite a bit on this. Yep. It's risk reward. Now, what else might matter there? We talked about this last time as well. So we've got a bounce. It's moved up 7 pip. My memory issues with ink to go. It's moved up quite a bit before the bars finally flipped. Right here, they all go green. Yay. Okay. But it took them 7 pips. You don't need channels for pieces of 10. It's cool when there are, but so first thing is And again, almost all of you nailed this, risk reward. What is the potentiality of this trade that I'm going after? Because remember, what we really want to look at is, 3 to 1, 4 to 1. Those are the kind of things. This is kind of like your lower threshold. There are one or two extremes in certain situations where 2 to 1, I don't want to get there, but most harmonic wave convergences, we're looking 3 to 1, 4 to 1 at a minimum. If we don't see that as a potential, it's just not worth our time. But I believe last time we covered a couple of things here. One, and this is trader's choice. Again, I'm telling you, we have a system that's very flexible. You just have to determine what it is you want to do with it. First thing is, you can wait 2 to 3 pips and see if the bars flip, and then you have an entry on a closed candle. Bars flip on closed candle. So that is one entry. Another entry would be, oh gee, 3, well, I better start with 2 to increase it. You just have a little bit higher threshold. You'll go 2 to 4 pips, and then bars flip on a closed candle. So this time you're just saying, I can go as far as 4 on a closed candle. Then we have 2 and in. We got a 1 minute peak flip at the convergence. We wait for 2 pips of pullback and we're in, and we are ignoring the bars. All we're going to do is pick up a few more -3s by ignoring the trend bar. Now, this is where head game matters, and this is why it's trader's choice. If you're going to get beat up by a -3, then you're probably not going to want to ignore the trend bars. But if your logic goes the other way, and you say, well, you know what? There's been plenty of times I've waited 3, 4, 5 pips and the bars didn't flip, so I didn't trade it, and it went 70 pips. So, well, your circumstances are going to make you trade robotically. You can't trade robotically in every circumstance. You can't trade robotically the same way in a 3 to 1 versus a 50 to 1. It's different circumstances. So you can trade robotically within the circumstance, but not just carte blanche, blanket across everything. So you can go -2. The fourth one would be to look at risk reward. See, we talked about this last week. What does the old paradigm tell you a stop loss is for? Again, major difference. What does the old paradigm tell you a stop loss is for? It says if you're losing, it's a way of limiting your loss. How much you willing to lose? Yeah, it's a safety net. So you lose a small percentage of your account. What? So it's to, oddly enough, I'm going back here. It's oddly enough to stop your loss. What is a stop loss in the new paradigm? What's the purpose of a stop loss in the new paradigm? Bingo! It is your profit regulator. It is your profit regulator. Yes, it will stop your loss, but that's not why we're looking at a 10 pip stop loss. So once again, this is a profit regulator in the new paradigm. Meaning your stop loss is totally dependent or totally dictates the amount of profit you can make per pip in your trade. It's a profit regulator. Don't forget that term. I'm going to have a quiz one day, and if you don't get the right answer, I'm going to kick you out of the room. I'll take some pills and get all grizzly. It's the profit regulator. All right. Now, why did we go through that little exercise? Because if I know, come on, seriously? If I know my trade is going to go 100 pips, well, we never know, but that's like the first logical target profit. Whether I get in at using a 4 pip stop loss or a 8 pip stop loss, does it affect the profit in my trade? I'm talking about profit. Does it affect the profit in my trade? Nope. Yeah, microscopically. Because in one trade, I make 96 pips, and the other trade I make 92 pips. So in one case I make 19.2% return, and in the second one I make 18.4. So it does affect it, but in that microscopic way. The reality is we don't consider that enough to be different. So if my risk reward is big enough, the fact that I have a 7, and the odds aren't going to change, let's say, the odds aren't going to change, then there's no difference between using a 4 pip stop loss and a 7 pip stop loss or 8 pip stop loss in terms of profit. The only difference is in the loss. But neither of them, I was willing to risk 2% to a 10 pip stop loss. Neither of them even got to 2%. One gets to 1.6 and the other's, 0.8. So the increasing my stop loss only affects the amount of money I lose, still not going beyond my initial acceptable threshold. So if the risk reward is there, I wouldn't automatically count this one out. On a flip, I don't think you want to enter a trade 1 pip, 2 pip, 3 pip. The bars haven't flipped. They're still red in there. 5, 6, 7, and you still got 2 red bars. That's a no trade. But 5, 6, and they're green, but the candle just hasn't closed yet. That's a different scenario. And so it is this reality of, here we go. Now look, I know in a group like this, there's going to be some people, and we're going to see trades, and they have, from the lower parallel to the median, it's going to be 20 pips, and they're going to get into the trade 7 pips, and they're going to say, Steve said it was okay. Not really. So that's up to the trader. It's there for a reason. I told you my first 90 days of testing TAB29, once got it where I wanted to get it, I cut down 50 to 75% of my minus threes that I would have had just with multi-wave on a 2 pip entry. So it does a good job of keeping you out of trades that really aren't quite ready to go. What would be another reason that I would consider expanding my stop loss on a convergence like that? See how smart our group is tonight. Well, can't draw straight, but you get the idea. See, it's not just isolated convergence. This is why we go looking for stuff. There's a trend line. There's a 0.618, retrace. Just better make it a little deeper. Cut this thing off here. Whatever. There's something to the pip there that says that's a hard bounce, which is most likely why it was accelerating so fast out of there. Because it was a hard floor. Does a 0.618, and it was one of Jim's pitchforks. See, when you got that, you know what I'm doing there? Excuse me. 3. 2 pips and I'm in. Yeah, risking 10%. 2 pips and I'm in. That's why you're trying to create these checklists, and the only problem with the checklist is it defeats your RAS, your SIG growth, and it defeats your Lorry's Law reality because you're crutching on the checklist. This is why I take the pressure off of winning in the trade. This is why you do your setups. So many of you get the heat of the moment becomes overwhelming because you're in unknown land. If you've gone through the 30-10-1 looks at the charts, or 30-15-1, and you have a sense for what's going on, and you've done your setups, you've got pitchforks, you've got your trend lines, you've got your Fibbo work done. Had a session with a trader today, real nice guy, Aussie type, getting ready for his afternoon barbecue to celebrate Australian Day, or Australia Day. And I just, he's probably the most committed to doing setups of any trader I've seen. Well, he's an Aussie type because he's not an Aussie, he just lives in Australia. So, yeah. The setups are immaculate. Every chart, every trade. Pitchforks on his 30, pitchforks on his 10, fib work done. He's a beast. Trade, commitment. And he's got a partner, he's got a full-time job, he does other stuff. And when there's he's got his choice of trades. When there's a convergence, he's got a series of ways he can look at his charts and trade just about anything. Anyway, I don't want to spend too much time on this. I think we did this in the very last session. Talked about the risk, talked about live 2, live 4, close 2, close 4, -2 and in, letting it stretch out because it's the risk reward is there. Special circumstances, an energy point on a hot Fibbo to the pip, minus 2 pips and in. Don't care about the bars. Now, if I go 3, 4, 5 pips and the bars still haven't flipped, I'm paying close attention. I'm looking for a 1 minute hook back because maybe this is early. But when you've got the right conditions. Now, guys, I can say to the pip 1,000 times, and we still see trades coming in. And, here's a 10 pip scale. And I see these wicks like that, and you're calling that a to the pip touch. That is not a to the pip touch. That's breached by at least 3 pips. This ain't horseshoes and this ain't grenades. We're close counts. This has got to be right on. How many times? We have a little group for the admins. I think we'll all be alcoholics by the time by the time this is over. And we talk about some of the things we see. And it's like, what can we convince to tell them this to the pip is important? Now, what also have we said? Again, is to the pip all that important if, I got a 75 pip possibility and I could come along here, nothing's breached but more than 2 or 3 pips, and I could come along here and draw a line. It should have been red. I'm not going to worry about it. The fork seems to be holding for the most part. Maybe it's holding at the 98% level. And and there's times where it just decides to breach, but not excessively. That's okay. Fully exercise your 10 pip stop loss. Make it, instead of 2 or 3 pips behind, put it 7 pips behind. Enter your trade. Let it go, baby. Is your profit possibility going to go down because you moved your stop loss out some? No, it's still 2 pips, 2% every 10 pips. The only thing you've done is increased the size of your loss by micro percents. So it's knowing when to be precise and when you just don't need to be precise. It doesn't matter if you want to trade. This will win you lots of trades. Whereas if you're looking for this all the time and a real tight stop loss, you're going to miss these trades that end up going 75, 150 pips. Ding dong, the witch is dead. Yeah, and what's even more funny is you circle it and say to the pip, and it's just not. I got something to talk about that later too, about another thing you guys are doing as a collective, some of you. Yeah, we'll get there. No, history of the flips isn't going to do you much good. Going back to that, it's just too. There's just too much data. Making sure I've answered everything here. Okay. So, what about risk reward when there's no real trend line or fork? How are you going to do risk reward? How about this? How about, depending on the time frame I'm on, looking at the last convergences, depending on which way I'm going, right? I'm talking extreme to extreme. I'm not talking anything but extreme to extreme. If I'm trying to do a sell here, I can look and say, well, I'm not looking at a trend line channel. I'm just looking at general channels. And again, even if we have them kind of drawn off into broken channels, your multi-wave can start. TAB29 can still help. How far was that? How far was that? How far? These get smaller now in this channel because it's a little pointing up. So you can look and get a gander at it. You just, I think this can go 100 pips. No. This is why you want to see the channels. Again, they don't have to be trendline tradable channels. You just want to get a broad idea of where top to bottom is. That's what you've done here. When you mark up your 30-minute chart, you have an idea in each direction how many pips there are in each one of these half channels or channels that have gone different ways. Top to bottom, bottom to top. What are the pips? Yes, Sense. I bet you can come up with a pretty darn average in here for where something up here in the top range will fall down or something from the bottom will go up. You'll probably be 80% right in terms of risk reward with no trend lines and no pitchforks. So this is the last one. This is mine, and then I'll get to one or two questions that are in the question box tonight. So something, you guys, I think I've been over this before. Candles mean nothing. The center line for the candles means everything. The width of the candle on your chart is nothing more than a optional decision, a design decision by the maker of your charting software. You will note most often your MT4 candles are a lot thinner than the candles on TradingView. I believe, just visibly looking at them. Haven't got a micrometer out and measured it. Yeah. So the width of the body means nothing. So you measure trend bar flips center line to center line. There's no such thing as measuring a trend bar flip directly below the candle. You can't come in here and call that anything in either direction. But some of you are doing that. And in your write-ups, you're saying, and the trend bar's flipped. And I look center to center, and they haven't. It's center line to center line. It's the same thing. I first taught this, gonna growl, with Hall. So those who've been around me for Hall, I teach this every time I talk about Hall because we have to see that flip on a closed candle. Now, here's where you get yourself in trouble. When you run your chart like that, this is not discernible as which candle has done what. You need to have the space. You don't need to know each bar. You know, I think personally, I don't like that. I think it's a waste. For a 1 minute chart, that's about all you need as far as candles. You don't need more than that. You got the view on your 10-minute chart of what's going on. You're just using this for entry. Personally, and again, trader's choice, but personally, I think opening it up, you know, to see each bar, it just doesn't serve any purpose. They all have to turn green and, you know, for a buy. And if there's red in there, regardless of where it is, you're going to see it. So I try and keep that as, you know, compact as I can, just not to take up chart space. So it is a matter of center line to center line. And you can tell the last candle, if we go if we go boundary to boundary on that last candle, we don't even have all the data, which is why it can't be used in itself. We have to go to the previous center line to measure what's going on. We all good in that? We mark the candle before our entry candle with the white line, right? So our entry arrow would point to the entry with the white line previous. Your entry candle should have a white line to the candle previous. As an example, bop it up, bop, bop. I don't have anything here I like. Let's say we entered on this candle here. We would not put our white line on this candle in front of it. We would put our white line over here, and next to it, we would write -2. So we know we're talking about that as our entry candle. And the reason we put it here instead of here is we don't want to have that big of a wick hidden. Because it may have shown us something on the charts that we need to see to evaluate your trade. If you put it on the one in front or the one immediately to the left and there's no wick, you don't have to put -1. It's just understood to be one to the left of the entry candle. But if you're going to put it 2 back, then you need to say -2. That's all. Well, if you have to zoom in until you're comfortable that you know how to read it. It's not, like I said, the biggest mistake is having way too many candles on the chart. On your 1-minute charts. You don't need many candles. No, it's always been -1. It's always been -1. No, it's always been -1. At least for 2 years. Yeah. I don't know. Is that FXFX posting? You might look there, Zoe. Yeah, I know. I've deciphered yours. Yeah, if you're watching the trend bars live for entry, it's easy to tell when they flipped. I'm just saying, I've seen a lot of trades where the traders have said, I did this, 2 pips of pullback, the bars flip, blah, blah, blah. And I'm looking and the bars aren't flipped. And so I'm wondering if you're giving me real trades. Maybe you're going back in history and just thinking it flipped and now you get caught because what you're showing me isn't the candles. You're going candle body versus center line to center line. Tim's point is right. If you're watching the trend bars, if this was a blue candle here and it was going to change the trend bars, you don't have to measure anything. You don't need to know anything. You're going to see when these turn green. All right, we got a couple questions in the group yet. What I'm saying here, one more time, the indicator underneath is measured wick to wick. You're not going to see it per the body. Just like this green candle here in the middle, if we follow the body down, you will see red on one side and green on the other. That's not what you're looking for. This candle is measured from here to the center line, not body. And as Tim points out, you really don't have to understand that here, because you're missing half the body's data right here. It's not, there's nothing there because it's going center line to center line. So if I was red on this candle and it was pushing up, I would see live, real time, these things turn green. And it's only then that I could say, and the candle closes somewhere, it's only then that I could say the bars flip, the trend bars flip. Don't make this hard, guys. Don't make some complicated science. It's not. Yeah, no, that's fine. I like clarity. It looks awkward sometimes. This candle, they were not flipping. You can't get confused and kind of look at the leading edge of this candle and come down here and go, oh, they flipped. You're measuring the wrong place. You have to measure center line to center line. That's the candle. It'd be much easier for you to get that if in building the candles, they just made them much thinner. Then you would start to see, body to body is not the way to go. It's the center lines. And some charts do that. Some charts are very thin. All right. Got a couple questions here. Well, multi-wave can do some things that TAB29 can't. It just depends on what you want and what you're doing. You can get by without multi-wave, no problems. For where we are now in TAB29, multi-wave is not used that much. Some old Pip Club traders will still use it because they have such expertise with it. Remember, we had it for 7 years. All right, for entering a quickfire TAB29 trade, is it okay to transfer the scan to a 15-minute chart, then switch to the 10-minute chart and enter on a 10-minute wave, hook back, and trend bar flip? You wouldn't want to enter any trades on a 10-minute flip, trend bar flip, unless your scale is there and unless you've expanded your stop loss. All your entries should be off the 1-minute chart. Now, whether you're looking at a 15-minute wave on your 1-minute chart or a 10-minute wave, you can either switch out the 10 for 15, or you can keep them both. I think if you're trading quickfire, I would recommend taking the 10 off. That's what I do. If I'm trading 15-minute charts because I've got scans, all you guys in here in the Precision Traders group with the that came in as a precision trader, you should be using 30-15-1. There are people like Zoe and Glenn and Tim who came from Pip Club. It's fine if they want to trade 10-minute or have power 10 on their 1-minute chart because that's what they grew up with. That's what they've had for most of the year. But you precision traders, you're 15-minute charts, not 10. There'll be times where I slip and say 10-minute chart, blah, blah, blah. You just have to excuse that, and I'll count on you to call me out on it when I do make that mistake. So I wouldn't go through the hassle of transferring it to 15 and then dropping it to 10 and try and do stuff at the 10-minute level. No, stay 15. Your execution is going to be off the 1. At some point down the road, when you're a chart wizard, you can start doing fancier stuff like that. But right now, I wouldn't recommend it. You said in one of your sessions that when trading a 30-minute wave off of a harmonic wave convergence, you will baby the trade for the first 10 minutes and trade it pieces of 10. Does that mean you typically enter 2 separate trades at the harmonic wave convergence? No, twin trading is stupid. I don't care who else says they do it. Twin trading is no different than putting 1% in 2 separate trades versus 2% in one trade and then just legging down that one trade if and when you need to. So I don't like twin trading. There's only one place for twin trading, and that would be like a 240 convergence, and you're good with your money management, and in one of those trades you want to trade it as a 240 wave, and the other trade you want to trade it as a 30-minute wave, so you kind of optimize and compromise the results you get. So when I say taking a 30-minute trade off a convergence, I won't, baby the trade, maybe I use those words, but I'm just going to, I'm going to trade that first 10-minute move on pieces of 10, because if it's not going to be there, if the convergence is actually going to drop on me more, let's say on a bottom move where I'm going to do a buy, if the bottom is going to drop on me with pieces of 10, whatever I make in that trade, I will not allow to erode off by using pieces of 10. And if the trade's going to go, it's still going to have a wave 2 for which I'll be able to get back in and enter. And if it's a deep enough wave 2, I'll double profit on a good portion of the number of the one wave from my original entry. So I just want to make sure, see, it's a way of minimizing going negative on a trade. That's why it's beautiful to use for an early entry on a harmonic scan. Because once you read to learn how to do pieces of 10, if you're early, most of the time there's still going to be some sort of pull down, and it may go. But on the other hand, if you're just early and it's going to go back up with the pieces of 10 on the hook back, you're out of the trade. Yes, that's what I said earlier, Neil. You have options on the 1-minute chart. It's going to default to the 10-minute wave. In here, as a PT trader, you should have 30-15-1 for your charts, and that means on your 1-minute chart, you want to have your 15. You want to have power 15. So put power 15 on your 1-minute chart. I would recommend taking off 10, power 10. Yep, good question. Now. Don't make my grizzly reputation bigger than it is. Y'all haven't seen me grizzly yet. Y'all haven't even had a group spank yet. Zoe and Tim can tell you about group spanks. Ask her in Facebook. Ask her in the group. What are Steve's group spanks like? Yeah. We get down and dirty in here, group spanks. I can see it now. Forex educator sued for sexual harassment. Ain't yet. I ain't yet, Zoe. Yeah, you're going to filter out, screen out everything except this part and post it. No, that's fine. If we can't joke sometimes. Yeah, if you have the premium edition, you could split the difference and make it a 12 and a half minute chart. All right. So yeah, it's just for me. Again, all things to all traders. You can enter a 30-minute trade and go 10-minute wave to convergence. You can take the 30-minute trade and go 30-minute wave to 30-minute wave convergence. I like to enter 30-minute trades with with the lowest risk possible of losing pips and the highest potential to make something out of the trade. So that's why I like pieces of 10 on most 30-minute trades. Again, I'm watching the waves. If you have real shallow 30-minute waves, versus really long potential for 30-minute waves, different story. Oh, okay. So little confusion. 1362 cross has nothing to do with trading. There's no trade on a 1362 cross unless you want to hook up with Rob Booker, and he doesn't even trade his own stuff anymore. The 1362 cross is a demarcation point for which we use absolute Fibonacci numbers from that static point to create the harmonic targets. There's no trade on a 1362 cross. And if you're in a trade on a 1362 cross, it means nothing. Okay, David, good enough. All right, well, that seems like we got all the questions in 90 minutes. Yeah, that'll happen sometimes. Harmonic wave convergence with certain things with the 62. Go ahead, Tim. Throw it in. Samuel Jackson. All right. Good stuff. Good questions, both in advance and here at the session. Again, let's flush these things out. No such thing as a stupid question. Remember what we're doing here? Pointed it out last night at the IML session. You're going to gain success with OMB. Who wants to tell me what OMB is? Or OBM? OPM? OPM? Other people's mistakes. Other people's mistakes. Yeah. So we're going to help each other in that sense. We're all in the same brotherhood, sisterhood. Help each other out. By helping each other out, other people help us out. Yeah, a lot of you are helping a lot. Yep, no such thing as stupid questions, just stupid people for not asking them. Correct. All right, well, it's Thursday. You guys have moved along at a great pace so far. We don't have much more to go in terms of learning, so the acquisition of knowledge is going to slow down, and now we're going to bring refinement and clarity to the knowledge that you have. Yeah, my voice is much better today. All right, so I'm done. So with that, as always, I'll remind you life can be short. So for those people you love and care, let them know you care and love them. I love you guys. I'll see you Tuesday morning, my time. and Facebook land in and around that. Have a great weekend. Australians, have a good rest of your Australia day. We'll see y'all.